Hey, what's up, my friends? So in today's episode, I want to talk about how much money do you need to start stock trading. I know some of you might be thinking,
Rayner, that's a silly question, man. You can start with as little as $50 or even $100. Look at all this, zero commission brokerage available out there these days.
I get it, you can start with technically, yes, $50, $100, it's possible. But the problem you'll face when you have such a small account dedicated to stock trading is a few things. Number one, it's near impossible to apply proper risk management. For example, let's say you have a $100 trading account. Let's say you want to risk 2% risk on each trade. On a $100 account, it means that when you put on a trade, you cannot lose more than $2 on that trade. I would say it's near impossible. It's very difficult, right, to have your stop loss of only $2. So that's the first problem you'll face. And this brings us to the second problem, is that if you do not have proper risk management, it's a matter of time before you blow up that small trading account. Okay, and if you think about this, if you blow up like 10, 20 small trading account, that ends up being actually a decent sized amount of money, like $1,000 or $2,000. Okay, and finally, the third thing is that when your account size is too small, you are limiting yourself, right, to the universe of stocks you can trade. Probably just penny stocks, for example. If you're not dealing with leverage or margin, you're probably just dealing with penny stocks. Those are the stocks that can accommodate your account size, and those stocks swing wildly up and down. So this is why I suggest, right, not starting right with $100, $50 or $200 stock trading account. So now you might be wondering,
okay, Rayner, so what's the answer, man? How much should we start with?
So in my own opinion, I would say, right, you should start with at least a $5,000 stock trading account. Some of you might not have that kind of money. We'll get to that later. And the reason why I say $5,000 is a few reasons. Number one, you can have proper risk management. With a $5,000 account and you're risking 2% on each trade, for example, let's say, a 2% risk, you can lose up to $100, of your $5,000 account. So with a $100 stop loss, you can do a number of things. You can buy, let's say, for example, a share that costs $100 and let it go to zero. That's a $100 loss. You can maybe trade, two shares that are, you can buy two shares that is worth $50. Let's say, share A is worth $50. You can buy two shares of shares A, and that's, again, if it goes to zero, that's a loss of $100, still within the 2% risk management. And again, here we are just talking about if the stock goes to zero. Of course, you won't let it go to zero. So what I'm trying to bring across is that with a larger account size, with a larger nominal stop loss value, you have more room to play with. You have more stocks to choose from. You have, more options. Okay, so once you have proper risk management, this brings us to the second point, which is you can avoid account blow up, because now you have proper risk management in place. It will, if you follow the rules, your risk management guidelines, it's unlikely that you will blow up an account. And finally, the last benefit is that you can trade most stocks out there. I wouldn't say you are able to trade all stocks, because some more volatile stocks, like maybe, those higher price stocks like Tesla, Amazon, their swings up and down, right, is easily more than $100. So that is stocks that you will probably still avoid even with a 5K account. But you can now trade other stocks like maybe which are priced at $40, $50. Those are now stocks that you are able to trade compared to having like a small account like $100 or $200. So that's kind of like another advantage, right, to having a decent sized stock trading account. So at this point, some of you are thinking, okay, Rayner, I don't have 5K, man, so what's your solution? So two options for you. Number one, if let's say you don't have $5,000, maybe you only have $500, my suggestion is to, do paper trading. Yes, still in the live markets, but paper trading, right? So there's no kind of risk to you involved. So in the meantime, while you are doing paper trading, you can get familiar with your trading strategies, see how it performs in the live markets, get comfortable with your platform, and over time, right, save up that money from 500, you save up to 1,000, 2,500, 3,000, and eventually to $5,000. And hopefully during that period, when you're paper trading, you gain confidence in your trading strategy. You can now take it in the live markets with $5,000 and with proper risk management. That's key, right? There's no point trading a sound trading strategy, but you only have $200 in your account and you can't apply proper risk management. That sound trading strategy is still going to fail because there's no risk management to it. Make sense? Okay? And if you don't want to go down that route, then the other option that I have for you is to trade other markets. Markets like Forex allows you to trade nano lots with a $500 account. You can still apply proper risk management, and that's probably a topic for another day. So that's my other solution to you. So as a quick recap, let's talk about what we have discussed. If you want to, get started in stock trading, yes, you can start with $50, $100, $200, but you will likely blow up the account. So my suggestion is to start with at least $5,000. You can trade most stocks out there. You can apply proper risk management, and more importantly, right, it prevents you from blowing up your trading account. Make sense? So with that said, I wish you good luck, good trading. I will talk to you soon.